Good morning, everybody. This is Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comments for the 9th day of April. It is a USDA report day. A lot of people think the USDA is just going to punt until the May report. Don't expect anything drastic coming out of this. Maybe they'll make some adjustments for corn usage again. We'll see what the carryouts look like at 11 a.m. Um, the one thing I've been watching, the South American harvest is going along, and Argentina announced that their corn crop is going to be 67 million metric tons. That's a lot higher than the 52.5 that the USDA is working with. So that's 28% larger than the WASDE. So I don't know how that's going to play out. That's something I would keep at the back of my mind because generally supply and demand, if you have more supply, um, price can go down. So that's one thing I'd be watching out if I was long corn and worried about what could make corn prices drop lower, right? So um, they've also got a bigger soybean crop than expected. Um, so I have to continue to watch that. Up here in America, we're continuing to watch the forecast for, warmer temperatures, increasing chances of showers. So right now it's looking kind of ideal for spring pollination. We'll see if Mother Nature has something in store for us this year. I have no idea. That's always the wild card. The ceasefire is going to be obviously something we're going to be talking about every 10 minutes for the next few months, right? Is it in effect? Is it not in effect? Who's following the rules? Who's not? I have no idea. But bottom line, we've got crude oil back to $100. So market's telling you that there's still risk out there for crude oil. That gave all the grains a bid last night. Made corn up 2 3/4 cents at 4.50. D's corn up 2 1/4 cents at 4.78. May beans up a nickel, 11.67. A really good recovery in beans, actually surprising recovery. Uh, we went down to 11.40. It looked like we were really, really going to get hammered, and that was the halfway back level that was about 30 cents ago. So will we be there today after the USDA report? I don't know. I'm more concerned about where we are today, but also Friday's close. New crop beans sitting here at 11.56. Again, relative to where we were in January, 11.56 beans are still darn good. It's $1.06 higher than 10.50, which is where we were. New crop corn relative to where we were, even at 4.78. We did go down to test 70 yesterday on the first flush. That was halfway back of the rally. I'll be honest with you, there's not a whole lot to work with in corn on a 50-cent rally, but we're in the middle of the range right now. Protect what you can. Nobody wants to be in a situation where we're sub 440 um, at harvest. And, we didn't at least take advantage of this area here, either with some cash sales or some hedges. The wheat, a good bounce in wheat, up 8 cents overnight. Again, kind of just trading with the entire crude oil complex. July wheat did make a pretty good stand yesterday at 587 and a half. So we rallied about a dime since yesterday's lows. Again, I think we're going to see how we digest whatever the USDA throws at us. Switching over to the protein complex, cattle managed to eke out a higher day yesterday. We'll see what happens today with the stock market being down because crude oil's up. The stock market's only down 180 points. The Dow, the S&P is down 16, so nothing drastic, but certainly a bit of a pause after a lot of people thought, well, the ceasefire is over. We're going to go back to $65 barrel oil. I don't think it's that simple. So that's what we're watching here today. As I talk to you right now, crude oil is trading at 99.92. That's going to continue to be the driver. I do have a daily letter, which I share with everybody. I put these levels out there. I spend a couple hours a day, every day, once the markets are closed. So I do the homework you don't have to do. If you want to know what the levels are that 90% of technical traders are watching, why they're important, I'll put that out there for you every single day. The levels are not fail safe, right? They do attract business. You still have to make a decision once we hit those levels. Perfect example is yesterday's move down in soybeans to that 40 level, 1140. If that had failed, we'd be, a lot lower. But it was a key point, a key area to watch. Everybody had a chance to do whatever they wanted to do at that key level. I would continue to watch those as we move ahead here in 2026. They can help you do what? They can help you make decisions about how you want to manage your risk. If you're a farmer or producer, you want higher prices, you want to defend against lower prices, bottom line. Or um, if you're a producer, you make a cash sale. If you get a hard break like we've had, might not be a bad place to start looking at re-owning whatever you sold, because again, nobody knows where we're going to be 3 or 4 months from now if we have a weather market. So manage your risk. You have two piles of risk. You have your unpriced bushels, which for most of you, that's your biggest risk. And then you have your price bushels. Flip side, if you're an end user, right? If you use a lot of meal or corn or wheat, whatever it is in your production, you know, you want to make sure that you don't get run over by a drought this summer. So hedge it. Try and do the best job you can. Try and take advantage of these markets when they move in a volatile manner. That's what we're here to try to do, Robinson Ag Marketing. If you need some help, give me a call, 312-638-8868. If you're not getting my letter, sign up for it, Robinson Ag Marketing. Have a great day.